All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan.
Today we're going to talk about my largest holding, a stock near and dear to my heart, Apple. You know, we have never actually done an analysis of this stock. I believe that we talked about it in my first portfolio update, but I never actually did an analysis of it.
We've never done one?
Nope.
Oh, well, okay. Well, if you like some of this entertaining stock market content, we're just two stupid guys trying to figure everything out. Give us a like and subscribe.
All right, well, then we'll get to it.
Two stupid guys trade stocks.
All right. You know who this guy is here?
I forgot his name. Wait, no, Cook. Good, Tim Cook.
Tim Cook. Tim Cook has been as important to Apple as Steve Jobs, in my opinion. Steve Jobs was the visionary that created the company and brought the iPhone to market. Cook is the businessman that has run this company and turned it into like a cash generating machine.
Oh, they generate a lot of money.
Yeah. How about that stock chart?
Yeah, that's pretty disgusting. All the way back from 2012.
You see, the funny thing too is, like, you know, we see a lot of parabolic shapes like this in stock charts these days, but the real question is what the time frame is. Apple has just compounded year over year, quarter over quarter for years, you know, decades even. You know, a lot of these companies that come up and have this parabolic rise literally do it in a few days and then it comes right back down.
Yeah, look at that. Look at those 200 moving average bounces there. Huh?
Yeah.
That black line. Perfect.
Yeah, pretty aggressive. Yeah. I mean, they're also pretty far from it at this point, but yeah.
We might get one in 2 years.
Yeah, maybe. Definitely a possibility. So this is my position, actually. I own 120 shares. Did I buy 120 shares? No, I didn't buy 120 shares. I'm going to explain to you how I ended up with 120. So the interesting thing with it is I actually bought this back in February of 2018. At that time, I kind of anticipated being unable to trade for a period of time. I had been doing some swing trading, actually owned some AMD prior to this. Remember that, Dylan? Made some cash there. And, you know, I just basically wanted to plow it all somewhere that I felt was undervalued and safe. So I threw it all into Apple. I actually bought 150 shares, pre-split.
Oh, pre-split. Okay, got it.
Yeah, I'm a little sad about that.
Yeah, so you're missing some shares in here.
Yeah, yep. This is the title of this slide right here, Covered Call Mistakes.
Got it. Okay.
So like I said, I originally purchased 150 shares at 159.41. You know, once again, this is pre-split. And I had 100 shares called away from me like a matter of a year later at 207. You know?
Ouch. Yeah.
I mean, it was a nice profit.
It was a solid profit. You can't be mad about that at all.
No. The problem is I probably should have bought that call back. In hindsight, I definitely should have.
Oh, I mean, in hindsight, yes, you should have. But you know,
I mean,
still made a solid return.
It would have been like, you know, over $90,000 at this point in time had I just held on to them. Yeah, exactly. It's a little scary. In terms of, and then I actually sold a little bit more during the whole pandemic era here. I sold another 20 shares at 304. And I bought some CCL with that, which honestly probably worked out fine. That day they announced the Pfizer vaccine, I was up like $8,000 in that one day. So I was like flying high on my Carnival Cruise Line stock that day.
Yeah, nice.
Yeah.
Good for you. I think I kind of remember that day, actually.
Yeah. I had like 1,300 shares going into that Pfizer vaccine announcement.
Right.
So this is Apple's most recent kind of financials. Looking at $83 billion in total sales for the quarter that just ended. You know, their services segment has been growing steadily over time. The nice thing about the services segment too, if you notice here, look at the kind of profit margins there. You know, you're talking about $18 billion in sales on $5.3 billion in costs.
Right? Yeah, that's fantastic.
You're moving much more towards like the Googles of the world as far as like profit margin at that point in time, which I don't know if you have noticed in like the press releases, but when Apple talks about you know, their earnings every quarter, they update their gross margin, and it's been kind of steadily rising. And that's why.
Okay.
You know, Apple's realized that they have this ecosystem of products out there. You know, they have this, you know, whether or not you are, I don't know if you followed the lawsuit there with what was the gaming company, not Jenga, Zynga.
Well, I don't remember the lawsuit. What was it for?
Basically, it was that game that was kicked off of the App Store. I can't remember their name, but
That's good.
yeah, it's basically overwalling off the App Store and making it so that you had to do purchases through the App Store where Apple gets a commission.
Oh, okay. I do remember that. Okay.
Yeah, yeah. It was relatively recently decided actually, and Apple for the most part won the case, except that they now have to also like kind of allow an alternative pathway that they can like promote within the app. Although and Apple won't get their portion of that, but it does still allow them to keep that company banned from the or that game out of the App Store that
Right.
their ban was upheld.
Fair enough.
Now, in terms of like their cash position here, $134 billion total current assets. The liabilities total liabilities looking at down here, $162 billion. In wait, sorry, I lost my place there. I'm sorry,
Total liabilities. Yeah.
125 in current liabilities. So they are someone that has a current ratio that is a positive number, which is a good sign. They're a stable company as far as financially, unlikely to have any sort of disruptions in terms of bear market cycles and inability to pay off their debt. Now, this is kind of where I predict my stuff going forward. In the last 12 months, they had about $365 billion in revenue. Had a 25% net margin, which has continued to expand over time. I gave them a forward-looking assumption of a 6% CAGR. Now, over the last couple of years, it's been a little erratic. They did actually have a massive COVID kind of benefit, as many companies did, where they were up like 35% in terms of revenue in 1 year. Now, I don't predict that being continually the case going forward, but I think a 6% CAGR is a conservative basis as far as like a growth rate for Apple.
I completely agree.
Yeah. And then I did a 2% share buyback. That's what Apple really does with their kind of earnings, is that they go back out in the market and they buy shares. It is my personal favorite way of seeing a company reward shareholders. Dividends are great, kind of internal reinvestment's great. But share buybacks is one of my most tax efficient ways of getting money back to shareholders. They're giving you a bigger and bigger piece of the company.
Right.
That's why if you read the Berkshire Hathaway annual report from like last year, talked about how they had put like so many billions of dollars into Apple stock, and they actually had sold several $1 billion worth of stock, but they still actually owned more than they originally put in.
Right. I remember that.
The power of share buyback. So this is where we get to 2026. So I'm looking at about a $489 billion in revenue by 2026. That's assuming that 6% growth rate, right? In terms of the kind of net profit here, I use the current kind of net margin and calculated a net profit about 127.27 billion. I think is a reasonable number. It's slightly conservative given their expansion in their operating revenue, and the fact that the compound annual growth rate is also relatively low. And I actually contracted their PE. You believe that, Dylan?
You contracted their PE?
Yeah. Like, how often do you see like someone who's doing a financial analysis in a stock that they're long on, where they actually say that the PE is too high?
I think there isn't there forward 26. They're forward
Okay.
PE.
Yeah. I mean,
Okay.
sure, somewhere in that ballpark. They're not exorbitantly priced, but they deserve to be mildly above market in terms of their PE, in my opinion.
Oh, 100%. Yeah, their forward PE is 26.47.
Yeah. So you're looking at, S&P 500 40-year average of around 40 or around 20 or so, 40-year average as far as like PE goes. Give them a little bit above market, just because they are a premium brand. They earn above market in terms of their net profit margins. So you're looking at a $3.2 trillion market cap company in about 5 years. Yeah.
Man, they went to that like 1 trillion. Remember, they like had it for a little bit, broke down, had it for a little bit. Now it's just douche.
Yeah. Yeah, exactly. They broke that ceiling. And then carrying forward that 2% per year share buyback, I calculate there'll be about 15 billion shares projected standing at that time.
That's a lot of shares.
Yeah. 120 of these are mine. Okay, Dylan, and you can't have them.
Fair enough.
So you get to a 2026 share price prediction of about $212 per share, in comparison to their current $150 per share price. Looking at about a 7% estimated annual return. Would I be adding more to my Apple position at this point in time? No, I would not be. I personally look like to see a 15% or so kind of annual rate of return to be adding positions.
But if they go back down, they hit like 125 in a correction. Would you add more?
125. You'd have to do the actual number. It'd probably be a little bit lower than that, where you'd have to get back into it. Low 100s. If you get to that point, I think.
You'd add.
Yeah, I think it's an ad at that point.
Okay, fair enough. All
Yeah.
right. What do you think the significance going forward of the M1 chip is? Because that's been the big thing, right? Because they're using Intel, now they're like, nah, we're not gonna do that anymore. We're just gonna make our own.
I don't think it really affected Intel in that it was only about 1% of Intel's revenue. Okay.
Yeah.
Now, I think that Apple moving to their own silicon has changed the industry in that it's emboldened many more companies to go to their own silicon designs and move processor design in-house. You're seeing Amazon do that. You're seeing Alibaba do that. You're seeing a lot more companies that are interested in designing their own silicon, which is why you're seeing companies like Intel moving towards this foundry business, because that is the direction the market's moving in.
Right. Okay.
Yeah, companies want to have more granular control over their processors, and as you're seeing this build out of cloud-based technology, you're going to continue to see that, I think, going forward.
I think Apple at that, say you said 2026.
Yeah, 2026.
I think it's gonna be 250 plus.
250. I mean, I don't think that's entirely out of the realm of possibilities.
It's Apple, man. They just like, they're so efficient.
No, I agree. If they can hit like a 10% CAGR, that's a very reasonable number for them, as opposed to the 6% when I gave them. Like, yeah, I try to be conservative in my numbers. Doesn't matter like if
oh no, you're supposed to, yeah, because you want to be. Otherwise, if you're wrong, you're most likely going to be close to your numbers would have been. So you want to be as conservative as possible when you're looking at a company, because most of the time, especially in this stock market, there's going to be super, right? So it's going to be crazy.
Yeah, the scary thing about like being conservative is you miss a lot of opportunities. That's the unfortunate part. It's like if you didn't foresee it the way it should have been seen, or your numbers were a little bit too conservative and you just didn't quite meet your buy price. But what people kind of lose sight of is, as like Warren Buffett will tell you, like the most important thing is not losing money. And when you invest, people get so focused on this could 10x, whereas like it's much more prudent to be thinking about this company is unlikely to go out of business, and they're likely to continue to make a reasonably, steady income over the next several years, like a predictable, steady income. Like that's what matters more.
For sure.
Yeah, I don't know. Let us know what you guys think. I'm curious. We're gonna get to Dylan wants to look at the chart real quick here, which is definitely always a nice thing to see where we are for supports and stuff like that.
So basically, this is the 100 moving average. It is still on an uptrend. The opportunity to rebuy here was here. I can't remember if you did it. I did here, and I sold at 140. But I should have held. I think I sold like here because I was like, oh, this isn't going higher, which I'm an idiot for. But the opportunity to rebuy in was here. If you were looking at adding, this 200 average is very, very strong for Apple. It doesn't really cross below it too often, with the exception of COVID. So looking at 136 would be your ad. That's why I was trying to bring it 125, because that's where the 200 was before.
Yeah.
Okay. If it hits 136, you add or no?
I don't think it's enough. It's not enough for me to add at that point.
It's a 200 moving average, man. Everyone's looking at that level.
Can you zoom back into? I saw something kind of interesting, I thought, on the chart there. It looked like, right there, that little hammer.
Oh, right here?
Nope. Back up. Right there.
Oh, this guy?
Yeah.
That's also at this 136 range, my man.
Yeah. Right. On a technical basis, I guess you kind of have a good eye for it there. That looks like that's some good support. But
look at this. Look at this roof here too. Remember ceilings and roofs? Boom. It all lines up at this level.
Yeah.
Uh-oh. I'm going to add there if it happens.
136?
Yeah. Oh, when I say add, I mean I have no Apple shares. I'll buy some.
Okay. Nothing wrong with that.
Yeah.
All right, guys. So let us know what you think about Apple down below. We'd love to kind of do some more numbers. I can do another one at like a 10% CAGR and see where that gets us. I'm just kind of curious. myself, so I might just do the numbers anyways there.
You're just seeing dollar signs, right?
No. I'm just curious. I think that's probably a little bit less conservative, but more in line with something that is achievable for them.
I would agree. All right. Have a good one, guys.
All right. See you guys in the next one.